Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Coinbase. And Bitcoin has held its ground pretty well, guys. We saw this nice spike in price last time we spoke, guys. I think Bitcoin was sitting right around 3,500, somewhere in that area, I do believe. And we broke above this resistance area right here, which was critical in my opinion. This area right here, guys, right above 3550, that was critical to get into. I told you guys we needed to finally break above this 3600 and then start consolidating. And so far, that's what we've had. We had this little dip in price right here where price came back down just below that 3600 mark to about 3580, and then the bulls were able to push it right back up. Now we'll have to wait and see if it's able to do, if this is able to hold at this point. But right now, things are looking in the short term anyway. This move was certainly not a bull trap, at least on the, again, looking shorter term. Now longer term, yes, we are certainly still in a overall downtrend. The volume, if we come over here and we look at volume, guys, volume is still extremely low. We're sitting at about 5.9 billion for the day. That is, an uptick from what we have been seeing over the last few weeks. But obviously it's a downtick from where we were a couple days ago. We were at 7.7 billion, which was a nice spike in volume, guys. We went from 5 billion to 7.7 billion, but 2.7 billion jump. And then yesterday we were at 6.1 billion. Today we're sitting at about 5.9 billion. So a little bit of a drop off in volume as everybody's kind of waiting to see if this move was real or not. But overall, guys, volume is still very, very weak. So what do? We got to come over and we look at longs versus shorts. Looking at longs versus shorts, we see a lot of people took their profits. In other words, long positions, people took their profit. Long positions got were closed. Which is a good sign. That's a healthy sign. You don't want to just see longs stacking when price goes up, because that just means you're seeing guppies in the market and they're just following price. Price goes up, they chase it. Price goes down, short stack, they chase it. You want to see people investing wisely, so you know that guppies aren't driving this market. And so far, this was a good sign. Now we've had longs slowly start to build since then. But overall, certainly longs are outpacing shorts. If we come over here and we look at shorts, guys, shorts dropped off the board here. A lot of these were stop losses getting hit. So shorts definitely dropped significantly. In looking at longs versus shorts, there's no question that longs are outpacing shorts quite a bit, which tells me what? In a low volume market, it tells me that market makers have a lot of incentive to drive price down, because how do you liquidate those long positions? You do it by driving price down. So I wouldn't be surprised, guys, if this thing would come back down and at least test this 35 or 3450, 3500 zone. And if it does, I want to see this area right here, what was resistance, start acting as support. If that does happen, guys, then we can look for a nice little bounce off that area, and that'd be an extremely bullish sign. If we break right through this area, guys, and come right back down to our 3400 area, that's obviously going to be a rather bearish sign, guys, and we could just be a small move in the continuation of the downtrend. And coming over here and we're looking at excuse me, guys, come over here and looking at the bigger picture, as I always like to do, guys. I always like to show you guys the larger picture here, and the larger picture tells us what? It does tell us that clearly we are still looking at the weekly chart. We are still in a significant downtrend, guys. I mean, I hate to say it. I don't mean to, I don't mean to burst anyone's bubble. Certainly, a lot of people are starting to get FOMO, which is understandable. Everyone's waiting for that bottom to get in, and I'm not saying that the bottom is not it. I'm just saying be very careful, guys. Looking at this chart here, we can see that we still have yet to decisively break above that 3600 mark. We've broken above it, but not decisively on the weekly chart, guys. And really, we need to see the weekly chart start to create a series of higher highs. In other words, I want to see this high taken out right here. I want to see us decisively break back up above at least 4300, but at least above this area right here, guys. Take out this prior high, and at that point, we can say that on the weekly chart, we've created that higher high, guys, and that is when we can say that we've at least temporarily, the trend has changed. But until that happens, until we take out this prior high, we are still in an overall downtrend, as is evident clearly by looking at this weekly chart. Coming out and looking at the monthly chart, also extremely, extremely bearish, guys. There's just no question about it. That being said, we are coming up to kind of a point here to where we can see an ascending support line kind of developing. In other words, if I kind of draw it out right here, what can we see? Well, obviously, we can see that we're approaching what is a fairly significant ascending support line. Let me get right on there. There we go. A fairly significant ascending support line. We can see that the price came down, wicked into it right here. Price came back down, barely touched it right here, but we have yet to break through that ascending support line. If we do break through that ascending support line, guys, I think it'll be a very quick drop right back down to 3,000, as I told you guys in the past. And that $3,000 mark should be a fairly significant support if we ever do get there. We can look back here, guys, and we can see there's a lot of order structure between that $3,000 and $2,500 mark. And pardon me, this is the area that I've got a lot of fiat set aside to go in fairly heavy in this area. I'm not saying it's going to come down here, but if it does, guys, this is where I will continue to go in fairly heavy. And I'm also not still counting out this area down here where this is my hard support, guys. This is where if 2,500 breaks down, I think it'll be a very quick drop to 12, 1,100. And we can see that that is going to be a very significant area. We've got a lot of order structure looking all the way back to even 2012. There's been a lot of order structure right into this area between 11 and 1,200, guys. This is where I'll go in very, very heavy with 95% of the fiat that I have set aside to buy Bitcoin. I will buy right here in this area. Now, I'm not saying that I won't go in heavy here. I absolutely will. I just told you that. But this is where I'll go in with 95% of the fiat I have available, and I never say that. But if we ever do see a $1,200 to $1,100 Bitcoin, that's when you're going to want to go in very heavy, in my opinion. Again, this is not financial advice. In the meantime, guys, is this a good time to accumulate? Absolutely. In my opinion, it is. In fact, it has been for quite some time since we broke down below that $5,000 mark, guys, and we came back down and we're testing 3,500, close to 3,000 and 3,500. This has absolutely been a good time to dollar cost average in. Even if price does come back down lower, guys, and I do think that there's right now there's probably about a 50-50 probability that we are going to come down to lower prices, or 50-50 chances that we are going to be coming down to lower prices and that the bottom is not in. That being said, if you were to buy here and you're planning on holding for the long haul, is that a bad idea? Not at all. Because 5 years from now, guys, you're going to look back at this time, regardless of whether or not you bought at 3,500, 3,000, or even 1,200, if it ever does get back there. 5 years from now, guys, it's not going to make that much difference. I do believe Bitcoin is going to be sitting at very, very obviously it's going to be at all-time highs 5 years from now, but I think we're going to have a series of all-time highs. In other words, I think that once this thing does take off, once institutional money starts entering into this market and we have a safe on-ramp for institutional money, in other words, in the form of an ETF or whatever form that takes, I think this is just going to explode. We have not seen anywhere near the kind of money that it's sitting on the sidelines waiting to enter Bitcoin. And we're coming to an interesting point in our financial markets worldwide, guys, where I do believe that that government fiat is going to start collapsing. And I don't say that this is not a tinfoil hat theory. I mean, all we have to do. I live in the United States, and our debt is just unsustainable. It's clearly unsustainable, guys. We cannot. There's just no way to pay it back. And eventually people are going to call us out on that, and that is going to lead to hyperinflation, no matter what happens. I've had somebody tell me, well, you understand the Fed. This is just paper money. It's a game to them, and the Fed could just forgive all that debt. And yeah, they could absolutely just forgive all that debt and wipe it out overnight. What do you think would happen to the financial markets if they did that? The dollar would become worthless. Hyperinflation would take off. So no, there is not an easy fix to this debt problem. And eventually the piper is going to get paid one way or another, by the debtor or by the person taking on that debt. Eventually all debts get paid, guys. I bring this up to say I think that the dollar, I believe, is getting weaker and weaker, and I do believe that we're in this a very high probability to where we're going to enter hyperinflation, not just in the United States, but I do believe that's going to be a global thing. And when that does happen, John McAfee got criticized for saying we could see a $1 million Bitcoin by the end of 2020. And while I don't think that's going to happen, that's not out of the realm of possibilities, guys, because once hyperinflation takes place and money becomes almost worthless, and you're having to, like in Venezuela, you're having to, carry in wheelbarrows worth of money where they weigh it rather than count it just to buy, basic groceries. How much do you think Bitcoin is going to be worth at that point? It's going to be, when you peg it to the dollar, it could very easily be worth $1 million. Now, $1 million in US might not be worth anything, but still, technically, Bitcoin would still be worth $1 million US. It's just that that's not going to buy you very much. So my point is, guys, yes, accumulating right now in Bitcoin 5 years from now is going to be, in my opinion, not financial advice, but not just Bitcoin, and precious metals, and in those type of things, in scarce assets that's going to be it's going to be one of the smartest things that you could possibly do, in my opinion, guys. And again, this is just opinion. It's just my opinion. This is not financial advice at all. Take that for what it's worth. All right, I'm gonna get off my soapbox. Get back to my TA here. So what I'm going to be watching very closely here, guys, is I'm going to be watching obviously this area between 3,600 and 3,800. This is a very, very strong resistance. But I'm going to be watching this area really closely between 4,120 and 4,000. Why this 4,120 to 4,000? Obviously, there's a very strong supply zone right here. As we can see, if I just draw this out right here, we can see there's a very strong supply zone where price broke down, came back, wick, 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 broke back down again, came up, wick, broke down again, came up, wick, wick, broke down, wick, wick, broke down, wick, 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 broke down. So what do these wicks mean on this area? It means there's a lot of sell orders that are still sitting here. So this is a very strong supply zone that Bitcoin is going to have a hard time getting through. Once we do get through that zone, once we do get up above this area, guys, and we start consolidating above this zone, consolidating somewhere around 4,400, 4,315 to 4,400, in my opinion, guys, that's going to be a very good sign that the bottom may be in. Until that does happen, I'm very, very skeptical of any kind of an uptrend. In other words, any kind of an uptrend that we've seen in the past, guys, any kind of bounce we've seen in the past is very, very quickly turned back into a continuation of the downtrend. So we're just watching an overall downtrend with small bounces. Once we do break above that and we create that new high that I was talking about, that's when we can start getting excited that the bottom may be in. Until that happens, guys, day and or swing trading, and by swing trading, is even very, very risky. Really a lot of day trading, but unless you're holding for the long haul, like I said, if you're holding for the long haul, dollar cost averaging in and just holding and forgetting about it is your best bet. But if you are a day and or swing trader, guys, you really have to be on your toes, because this thing could turn right back around at any point and come right back down to this $3,000 mark, at least between 3,000 and 2,500, in my opinion. Also, the reason that I'm watching this area here is if we go swing low, swing high of this, where did price break down in the past? Broke down right here, came down, consolidated, and then just ended up breaking down. So if I go swing high, swing low, what do we have? We can see that lines up perfectly. That 4,100, 4,000 to 41. Whoops, that just got. There we go. Make sure I got it. Between that 41,000 and 4,100 lines up almost perfectly. Sorry, guys, I threw off my fib level there with my cursor. I didn't know it was still sticking. But lines almost perfectly with that golden pocket between the 618 and the 65 fib level. That's not a coincidence, guys. So this is going to be a very, very hard resistance to get through. But once we do get through it, and once that starts, and by getting through it, I don't mean by a wick, guys. We wicked through it here in the past. I mean by a decisive breakthrough. In other words, a daily candle, both opening and closing above this zone, and then we have this come back down and start acting as support. Once we break up above this and this starts acting as support, that's going to be a very, very good sign that the bottom may, in fact, be in. All right, let's come over here and looking at moving averages and exponential moving averages. We can see on the daily chart, guys, we can see that price came up and found resistance right at the top of the Bollinger Bands here, which coincides perfectly with that 50-day moving average. We know the 50-day moving average is a very, very good indicator of a bull or bear market. Once we can break above that 50-day moving average, guys, that's typically a very good indication that things may be starting to turn around. In fact, that 21-day EMA, exponential moving average, is also a very good sign of a short-term momentum shift. But a better sign of a long-term momentum shift is obviously when when price can break up above the 50-day moving average. But the fact that we've been able to stay above this 21-day EMA, if we can remain above it, even if we come back down and retest some of these lows again, 35, 35, 50, that's no problem. But if we can just come down and we can maintain above that 21-day moving average, guys, and I would even like it to come back down and test it again so we can establish a hard support. But if that does come back down and test that 21-day EMA and that holds, obviously, guys, that's going to be a very, very, very bullish sign. But right now, we're sitting right there at the top of that the daily Bollinger Band here, guys, acting as a lot of resistance. So let's wait and see if we can break up above that 50-day EMA, and if we can establish that that Bollinger Band, break above that 50-day, or excuse me, that daily Bollinger Band there, guys, and start causing it to expand. If that can happen, guys, obviously would be a very, very bullish sign. For now, guys, it does look like we may come back down, possibly retest that 3,500 to 3,550, and then I'd be looking for a nice little bounce off that point if we do come down and test that area. All right, looking at the daily RSI, we can see, guys, and I pointed this out in the past, but I want to reiterate it because it's no coincidence. I pointed out here, guys, that we've been unable to decisively really break up above that. Really, it's sitting right around 55.8 on the again on the daily RSI, guys. Really 55.8, 56. We've been unable to decisively break above that point since September of last year. With this one exception right here, where we briefly peaked up above it and then price just collapsed. On the candle that would have been a wick. So this was the one exception, guys, which is not a decisive break at all. But we can see that it's been tested numerous times and unable to really break above that zone. And I told you guys about this. I've been telling you guys about this, Mark, for about a week, actually, it's been almost 2 weeks. I've pointed this out in past things, and it's no coincidence that we came back up. And where did we hit? Found resistance right at that mark, guys, right around that 56 RSI on the daily RSI, and then found a lot of resistance. So once we can decisively break above, and I don't just mean a quick break up above here and an immediate rejection, but a nice decisive break above, and we start consolidating above that 56 point, I do think that's going to be again another good sign that we may have bottomed out, and this thing may be heading up at least on a temporary bull run. But I'm not saying that's going to happen yet, guys. I'm just saying this is another thing to keep an eye on. All right, and finally, I'm going to go ahead and wrap things up here, guys. Finally, looking at the hourly RSI, the 1 hour RSI, we are seeing some bullish momentum. In other words, if I look at price and we go point to point, we can see that we've created a series of lower highs. If I come over here and I look at the daily not the RSI, the daily MACD, we can see that we've created on the histogram a series of higher lows. We've created lower lows on the on price, and we've created higher lows on the MACD. That would be bullish divergence, and that would suggest we might see a spike in price here. If we do, we need to take out this prior high here, which sits at about 3,700 on Coinbase. And again, all these prices will be different depending on your exchange. If you're looking at Bitfinex, a little bit higher, some others maybe a little bit lower, but overall you want to look at this pattern. But this daily RSI, I would take very much so with a grain of salt, guys. I'm not putting a whole lot of weight onto that because this is the only area I'm seeing it. And if I look at the same hourly RSI, I don't see that bullish divergence, guys. So I'm just kind of pointing this out. Just for some of you traders out there that may have noticed this in the past, yes, I am seeing the bullish divergence on the hourly, but I'm not putting a whole lot of it. Doesn't mean this thing might not bounce, but I'm just seeing a lot of other things, guys. The low volume, the fact that longs are outpacing shorts fairly significantly, and we're just getting some mixed signals here. So I would wait for a larger move here. That larger move might come in the form of price coming back down, retesting that prior low, and then taking off, or we could just bounce from here. So if you haven't entered into a position yet, I would kind of sit on the sidelines and wait if you're a day and or swing trader. If you're more of a long-term, if you're looking for a long-term hold, as I said, guys, go ahead and start dollar cost averaging in. This is not a bad time to do that. But overall, if you're day and or swing trader, I'd wait for the trend, wait to see which way price goes, and I would play based on that. In other words, if we get a spike in price coming up here, guys, coming up to this area here, a lot of where we have a lot of order structure at the top of this 3,800. If we get that spike in price coming up here to 3,800, I might scalp it very, very quickly, a very quick short from 3,800 down to 3,700, and I'd get out. Get in and get out, because once we come back up, we could see a temporary drop and then just a nice explosion from there to the downside. If we do get price coming back down, I'd look to buy somewhere between 3,500 and 3,550, and I'd be targeting 3,600 to 3,700, somewhere in that area, guys. But I would get in and I would get out. Do not get greedy, guys. The second you start to get greedy as a day and or swing trader, guys, is the second you're going to lose out. So again, if you miss out on some upside, no problem at all, as long as you made some profit. That's again the name of the game is to protect your fiat. So I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe, take care of yourselves. This is Working, signing out.